If you are studying finance and having trouble understanding the capital structure of a company, then you should watch this tutorial. Think of a company that is, unfortunately, on the brink of collapse. Now, surely, the company would have loans, bonds, preference shareholders, as well as ordinary shareholders. Then, in the case of liquidation or bankruptcy, who gets paid first? Meaning, what is the order of payment? In most cases, the order of payment is as follows. First, the debt holders, example banks, as the loans are mostly secured over the assets of the company. Second, the bondholders. Third, the preference shareholders. And finally, fourth, the ordinary shareholders. Okay, surely you must be thinking that you do not want to be in the position of the ordinary shareholder, as they are the ones taking the highest risk in the business. Well, there's a common term in finance, meaning those who take the highest risks are also entitled to the highest returns. Think of a situation where a company is growing and profits are increasing. The ordinary shareholders would obtain the highest returns. My name is Shaktee Ramtohul. Hit the like and subscribe button for more videos on accounting, banking, and finance.